quick introduction. All right, well, welcome everyone to session number 4 of our 4th set of SBA Community Navigator webinars. My name is John Walls. I'm the co-director of the Entrepreneurship Center. I'm here with my colleague Ty Umo, who is central in making the Entrepreneurship Center work. You may also know the other co-director. His name is Ken Allen, and if you've been on a number of these calls, you've heard from him as well. So I imagine most people on the call are very familiar with our presenter tonight, Crystal Mitchell, but I feel compelled to just call out all her many accolades. So as many of you probably know, she's a business coach, an entrepreneur, educator, trainer, small business QuickBooks Pro advisor, a forensic financial strategist, podcast host, speaker, certified adult and youth entrepreneur educator, and certified adult and youth entrepreneur educator. And I have to say, I'm just always very appreciative of Crystal, because as part of her youth entrepreneur education program, she actually spent some time educating my own daughter, and she's done a wonderful job. So for 30 years or more, Crystal has provided entrepreneurs and small business owners with technical assistance, access to the tools, mentorship, and resources necessary to support each stage of business development and growth in order for businesses to achieve success across the board. So again, just talking through what all the things Crystal does just makes me tired even just talking about them, but her passion for small business and focus on providing the advice needed for companies to get to the next level is a great benefit to everyone. And I think you all know that. That's why you're on the call tonight. In terms of the SBA, just wanted to make sure everyone knows that this is an SBA initiative that arose from COVID and the damage the pandemic afflicted on small businesses. Initially, it was just financial support, but it evolved into a nationwide program called the Community Navigators Pilot Program. And this program has a very high focus on knowledge and access to capital. So the webinar series is part of a program of 7 classes that covers core business activities, including marketing, financial management, and access to capital. And I believe Crystal is going to be focusing on our books this evening. And so that's for everyone who's serious about business knows that that's a serious topic. And you need to be on top of that if you're really trying to make something of your company. You may know that we have these seminars every Wednesday from 5 to 7, and we'll be doing that through late December via Zoom. And you should also know that the LA Urban League can offer a range of services and tools beyond what you'll hear in this series. So please register with us as a client if you haven't already done so. You'll be assisted by business counselors for direct and ongoing advice. One of those counselors may and could be Crystal herself. You'll be notified about all the LA Urban League events, including access to banks, other types of lenders and investors. And we'll keep you informed about all the grant opportunities that flow across our desk. It's a good venue to seek advice on industry issues and all types of opportunities. With that brief introduction, why don't we go ahead and get started for what everyone's really here for, and I'll turn it over to our fabulous colleague, Crystal.
Hello, everyone. Glad to be here. Hope you had a great holiday, Thanksgiving, and looking forward to Christmas and going to be safe because we're still not quite safe from COVID, but I hope you enjoyed your family because that is very important. So tonight we're going to talk a little bit about accounting as well as insurances and taxes, because that's all of the financial compliance that goes into running our small businesses. And a lot of times we focus in on one or another or none at all. And during the pandemic, I'm not sure how many of you applied for sources or resources during the pandemic in order to keep your business alive, but a number of people ran into challenges because they weren't business ready. And so part of that business readiness is making sure that the foundation, the financial soundness, and the foundation of your business is solid, and that your business can withstand any crises, um, if you prepare for it in advance. So gonna skip that because can't play that, don't have a sound. Um, so as John indicated, these who I am. I've been in business for quite a long time. I really love what I do, but in addition to these credentials, I am also the co-director of Recycling Black Dollars. And one of the things that I recognized when I became that director was we were talking about businesses, Black businesses supporting one another, and but I also found out that a lot of times we don't run our businesses um, up to standard. And so that makes it very difficult when you go to a business to support it, and it's got a lot of jagged gaps in it. And they don't have enough supplies, they don't have this. And a lot of times that is because they haven't managed the financials a part of their business and really understanding how much it costs them to run the business. So that's one of the things that we have to focus on if we want to have a successful business. So tonight we're going to talk about one, risk management, because that kind of goes along with the accounting and bookkeeping and the compliance of your business, is making sure your business is well protected um, from lawsuits and things of that nature. And then the second thing we're going to talk about is taxes, because that's vitally important in the business world. Sam wants his money, but you at the same time don't want to give up all your money. So we're going to talk about that. We're going to talk about the top tax mistakes that small businesses make, and then we're going to discuss accounting 101, and that's just going to be basically how you're tracking your money on a overall basic view, and then whether or not you should be hiring doing your taxes yourself or a tax pro. But that's all part of compliance of running your business. So before we get started, you guys have met me. I would love for you to put in the chat, who am I speaking to? What is your business? How long possibly you've been in business? Or at some stage, where are you right now in your business? But introduce yourself and tell me about your business. It really helps so that uh, gear my message to everyone that's on the call. So, Abel Dobb or Anthony Dobb, your business is called Abel Dobb Startup Housing, housing for homeless and low income. Okay, that's very appropriate for the now. How long you been in business, Anthony? And are you a nonprofit or a for-profit? Original Pete, a Taco Pete. Okay, Aaron. Food. Anyone else? How many people we have on the? We got 16 people. Dr. Hill, a clinical psychologist. Okay. Series of event home improvement. Let's see what we got. New and repairs. New for profit. Okay. Holistic plant management. Sarah has skincare, and she started this year. Dana, independent Mary Kay consultant. That's how I started in business. Digital infrastructure solutions, just starting up. Okay. Yolanda from Cuties Catering. That's cute. I like the name. Yavonda, I think that's the name. Anyone else? I think there's 16 people here, unless 4 of them are us. All righty. Okay. Well, that helps. Anyone else coming behind you, please put your information in. So I'm going to kind of cater the conversation around some of your businesses. And since you're just starting out, this is the perfect place for you to be so you start out correctly. So we all have to have insurances in our business to protect our interests, to protect our investments, and it really truly is part of the financial structuring of your business. So we in our industry is risk management, and there are two types of risk, or there's actually two types of risk. There's an internal risk and an external risk. And so because we are never sure of what could happen, um, that could create a major problem for our business. So uncertainties, while they exist regarding the occurrence of some undesirable or unfavorable events in the performance of our business, sometimes we just don't know when it's about to happen. Um, but the probability that the future state of your business would be less successful if we're not making sure that we're proactive in making sure our businesses are protected. A lot of us think, oh, my business is small, or I work at home, or I don't think I don't see any foreseeable risk in the future, and then along comes something that can actually not just only shut down your business, but it actually could affect you on a personal level as well. So it's always important to make sure we're protecting our business. So some of the internal risk is damage to our property, our firm, or our employees, inefficiency on part of management, injury from accidents. These things take place within the workplace, dishonesty, labor strikes, theft, misbehavior from our employees, and poor internal organizational structures. These are the things that you actually have control over, but you have to make sure you have policies in place to address them. And because they're more likely, the opportunity for them to happen is more likely than not. You want to make sure you have uh, policies in place that will protect you. External risks are outside risks, like damages if you have a brick and mortar from floods and earthquakes, and impact on your business by adverse legislation that can change how you do business, and change in technology. So there's always legislation on the ballot that really can greatly affect your small business. There was actually one this past election about 2 years ago, AB 5, which was huge and changed a lot of business, a way a lot of people did business. Literally, in some cases, changed their business model. So you can't operate business under a radar. You have to understand what you need to have in place to protect your business. And if you guys have any questions, please put them in the chat, and I will answer them as we go along. First thing is making sure we have that your business itself is protected. Um, so I'm sure a lot of you have been told, as you've been going through this process, especially some of you that are just starting your business, choosing the right business structure for your business is important. Um, Insurance protects you from unexpected costs of running your business, accidents, natural disasters, and lawsuits, and could run you out of business if you're not protected, right? So the same thing if your legal structures are not protected, your legal structure of your business is not protecting you from your personal property, your personal resources and assets. You also want to be able to structure your business so it's an entity upon itself. So as you're thinking about your business, in the beginning, we all start as sole proprietors, but then we want to make sure that we're choosing the best structure. So today, a lot of businesses are limited liability companies, LLCs, and typically, this will protect your personal property from any lawsuits and but even this, that protection is kind of limited. So you want to definitely do your research. For those of you that are in professional entities, you more or less have to have a corporation, either an S corp or a C corp. But before you actually set up or set up your structure, you really do need to understand why you're doing that. So you should talk to an attorney, someone that, or CPA that can give you the pros and the cons for the type of industry that you're in. I also highly recommend um, the timing is very important when you actually apply and acquire your structures. Um, Starting in January, if anyone's looking to become get their to become a corporation, that would be a good time. So anywhere from January to June is an excellent time to do it because there is a tax every beginning of the year. And so if you incorporate in the last 3 to 4 months of the year, like right now, if you were to incorporate your business in this month, December, come next month, January 15th, you would be required to pay to pay your self-employment tax. So, and there is no way out of that. It doesn't matter whether you're a brand new business or what it is. The state of California, or the state of California, they require that. So you want to make sure that you monitor that, because they want that regardless whether you've earned a dime. It doesn't really matter how much money you've acquired or have not acquired. That tax is due January 15th. So, but come January, if that's something you've done your research, you've done your homework, you've spoken to some advisors, then by all means do it in January. Just don't do it. I always tell people don't do it 6 months, the latter 6 months of the year. Your business insurance can fill in the gaps to make sure that where the liability and the protection from a business structure may have its limits. Business insurance fills in that gap to make sure that your personal assets and your business assets are fully protected from unexpected catastrophes. And in some instances, you may be legally required to purchase certain types of insurance. So, for those in consulting industries, we're required to have a liability policy to protect the companies that we're doing consulting for. So it depends on your business. If you're providing any advice to anyone, it's a good thing to do that. The federal government requires every business with employees to have workers' compensation, unemployment, and disability insurance. And some states require additional insurance. Laws require insurance vary state to state. So please visit your city or your state's website to find out the requirements for your business. Also, the SBA is a viable resource for you as a new business owner. Okay, so let's talk about the various types of insurance that one would need depending on the type of business you're in. So, first one is a general liability. Any business. This protects you against financial loss as a result of bodily injury, property damage, or lawsuits. So this is pretty much the norm for anyone in business, just to make sure you're protecting yourself. Product liability insurance. This is more geared to individuals that have businesses that have product as their business, that they're manufacturing or wholesaling or distributing and retailing a product. This protects you against any loss, um, against any defective product that may cause bodily injury, or bodily harm to your client or your customer. Professional liability. This provides services to customers. This is for businesses that are doing professional services to their customers, and it also protects you against any malpractice, errors, or negligence. Now, if you are, like, I think there was a clinical psychologist here, I think generally that is even part of you maintaining your license, is to make sure that you have your professional liability in place. And then commercial property insurance. This is businesses with significant amount of property and physical assets, and so it protects your business against loss and damage of company property due to external risks such as fire, wind, smoke, civil disobedience, or vandalism. So you want to make sure that you find a good insurance company. Possibly you can get what they call a blanket policy, and it can cover all of it under one umbrella, and at the same time probably could give you a reduced rate since you're doing them all under one banner. Um, as a general rule, you should insure against anything that you wouldn't be able to pay on your own, or that would put your business in major jeopardy, because it would create a major a cash flow problem for you. Um, so that's how you determine whether or not you really need insurance or not. If it will put you out of business or jeopardize your personal home, your home, your assets, your family, then it's probably a good thing to do to preempt any possibilities of those. Next is, and this probably applies to most of us now. Most of us are working remotely, and so now there's home-based insurance policies. So this is businesses we're running out of our personal homes. Generally, this can be added to your homeowner's insurance as a rider, and it offers protection of business equipment and liability. So you can look into that if you own a home, or you have renters insurance. Business owners policy. So for those of you that are in business with partners, um, this is a good policy to have as well. It protects you and the partner and from being sued, and each other for any malpractice that may take place. You can bundle all of these insurances together, and that should give you a reduced rate. And then finally, errors and omissions. This is pretty much for our professionals, and it protects against claims of in I'm sorry, Anthony, can I see the last slide? Yes, you can. And it protects for any claim for inadequate work or negligent actions. So um, those are the 7 common types of insurance. Now, why did I mention this at the very beginning? Because when we really get into bookkeeping compliance, it's all about making sure that your business is business ready, and this is part of that process, is being business ready, right? And as you move forward, if you need as we move forward to become contract ready and bank loan ready, these steps have to be in place so that when you are in need of those of a bank loan, or you're looking to apply for contracts or proposals to help you grow your business, this will already be in place. So this next one is all about the taxes, because as we know, in this country that we live in, this is how the country, this is its business model, is the tax structure. So we're going to talk a bit about all the taxes that you as a business owner is required to pay. And we're also going to talk about the dates, and how you should put this on your calendar to make sure that you are business ready, right? So this is all part of the business readiness and the tax readiness for your business. So first of all, let's talk about the team. So important to have an adequate team behind you as you go forward in running your business. Um, and this is just the financial team, but you also have your legal team, your mentors, and advisors that can help you in the industry that you're in. But your financial team consists of your bookkeeper, and that individual oversees your company's financial data and compliance by maintaining excellent and accurate books on both your money's your receivables, which is money coming into your business, and your payables, which is money going out of your business. And then next, you have your enrolled tax agent. This is a person that has acquired an IRS prepared tax identification number and are preparing the taxes for your business. And each one of these individuals could differ depending on their level of skill, education, and expertise. But for you, you also are looking for that individual that understands the industry that you're in to make sure that you're getting the deductions that you need to take every at the end of each year, not to prevent you from paying taxes, and I will talk about that shortly, and why you want your deductions, but you don't want to necessarily not pay taxes, and I'll tell you why that is very shortly. And then the other individual on your team is your CPA, and this is the person that ensures that companies and individuals are complying with the tax laws by filing their federal taxes and by filing their federal and state income taxes in a timely manner. Now, um, a lot of times we make decisions based upon how much we can afford, right? And I'm going to tell you in this area, you get what you pay for. And I can guarantee you, if you don't get the best qualified person to provide to be on your financial team, the cost factor is going to be so much greater on the backside if the person wasn't qualified to do what you needed to do, and then you become penalized for it. So sometimes in this space, I'm going to tell you, you get what you pay for. So on an average, a bookkeeper is going to cost you somewhere between $75 and $85 an hour. They normally, if they're not working for you full time, and they don't necessarily have to in the very beginning of your business, they can come in and do a review, and it usually may take 2 to 4 hours once a month. So that's an investment well worth it. Your tax agent, when it's time to file your taxes, is going to, on an average, cost you anywhere from $146 to $273 an hour, depending on the complexity and the legal structure of your business. And finally, your CPA is going to cost anywhere from a minimum of 2.25 to 475. So it just depends on what you need from them and where you are in your businesses. So, tax preparers and tax consultants can professionally prepare your taxes while offering insights into tax law changes that might affect you and your business. Some tax accountants also offer tax planning advice to help businesses and individuals save money in taxes. A career in tax accounting is challenging but also very rewarding. So, I'm going to tell you this. When you go to have, whether it's a CPA or an enrolled agent, and you go to them and you tell them, I don't want to pay any taxes, they're going to do exactly that. But here's what's going to happen. Down the line, you're going to need capital to run your business. And so when you go to the lender and present them with your tax returns, and they're going to ask for 3 years of tax returns, and they're going to see for those 3 years that you have paid no money in taxes, they're going to automatically make an assumption that you cannot afford to have a loan because you're not making any money. So what you want to do with all three of these individuals that are part of your financial team is to include them in the goals and the plans for the future of your business. If you know you want your business to grow to a certain level, and you know maybe 2 to 3 years down the line you're going to require capital in order to make that happen, then when you sit down with your CPA, or even get with your enrolled tax agent, it probably will be more your CPA. You want to have that conversation that in 3 to 5 years, I want to have employees. I want to be able to scale my business up to the next level. I want to be able to whatever it is you want to do, you need to include them so then they can then help you plan for those events, and you can be positioned so when that time comes, you're ready for that. But if you go to them and just tell them, I don't want to pay any taxes at all, they're going to do that, but down the line, you're going to find that you're going to suffer from that. Regina, you're asking, can this all be done by one person? It actually can. Um, yeah, one agency or one company. Usually CPAs don't operate. They hire bookkeepers to do the work for them, and they do taxes as well. So it could be one person. It just depends on what your needs are and what your affordability for them. Now, the bookkeeper actually, I recommend brand new businesses to be their own bookkeeper so that they can have a full understanding of what it takes to run their business, how much it costs to run their business, how tracking their cash flow, on understanding the highs and the peaks and the valleys in their business. And you can only do that by learning how to process and to be your by learning how to manage your books. After you have a solid and full understanding of how the financial structure of your business operates, then at that point you can hire out. But prior to that, hiring out first and not knowing how to direct the person to be your bookkeeper will be that detriment to you and your business. So, and we'll talk about that a little bit more as we go further in. So let's talk about business taxes, the things that nobody ever wants to talk about, and things that we never want to pay, but is a you're welcome, Regina, but is a vile is you just can't do or live in this country without that. So business taxes are what you pay depending on how you set up your business, and there are four general types of taxes. So your personal income taxes, this is a tax that the government imposes. You guys have been doing this since your very first job and you earned money. By law, taxpayers must file an income tax return annually to determine whatever your tax obligations are, and the income is based on revenue that you receive either from your, if you were working for someone, from your employer. And now that you're working for yourself, it will be the profits that you will take or the salary you will take from your business. The other one is the estimated taxes. This is really geared for those that are freelancers and independent contractors. These are people who do not have taxes automatically withheld from their earnings. So what you have to do is pay your taxes quarterly, so that at the end of the year you're not getting hit with a huge tax bill, and it is based upon the earned income that you're making in that period, which would be on an annual within that quarterly period. And you would sit down with your CPA or your tax preparer. Most cases it will be a CPA that will give you a quarterly estimate, and then this is what you'll pay um, when they come due quarterly. Payroll taxes. This is what your employee and employer. There's a match. You pay 6.2% of compensation up to an annual wage base up to $137,000. 0.7 for the Social Security base. For those of you that have been in business for all of their lives, never really worked for anyone, or just starting out, this is a major thing for you. You have to pay into the Social Security and Medicare in order to receive those benefits when you turn 65. So you want to make sure that you have your 40 quarters in. That's literally 10 years of having uh, taxes withheld from a paycheck. So if you have worked for someone and you're not sure, but you have not gotten those quarterly, you have not gotten in your 40 quarters, it's really important that you research that so that come 65, you won't find yourself not without those benefits. And then if you haven't, then you want to make sure that the payroll and salary is done by, are you asking who does it or how it's done? Usually the bookkeeper can do run payroll for you, if that's what you're asking. Okay. Yes. Okay. A bookkeeper can run your payroll for you, or payroll clerk, but most of the time, a bookkeeper can do your books. They can run your payroll. They can just manage a good bookkeeper. A full charge bookkeeper can run all of the financial aspects of your business. He or she works directly with whoever's preparing your taxes or your CPA. They actually work together as a collaborative team. Next is your self-employment taxes. So if you're not working for someone, then self-employment tax is imposed by the owner, and you must pay the federal government to fund your Medicare and Social Security. It's very similar to the FICA. The FICA tax is paid by your employer. So this is what you would be doing now that you are your employer. You're paying your $800. It's $800, and that's that fee that you pay at the beginning of the year. So income taxes, again, you all know how that works, right? You've been doing this for most of your adult lives. Um, so it's single. It's taxed based upon your being single under the age of 65. There's a minimum tax amount, gross tax amount um, that can be made, and requiring a filing of tax returns that if you're making at least $12,000 a year. When are they based? What are they based upon? It's based upon the money that you earn. More about the $800 fee, please, when you're able. Okay. Um, so it's based upon how much money you earn, and then the percentage based upon the tax rates the tax uh, uh, um, uh, that you're in, the tax bracket that you're in. Um, And what happens if you don't file taxes? If you're late, there could be penalties and interest applied. If they owe you money, maybe there's some interest that you may receive, but everybody's by law is required to file taxes at the end of each year or the beginning of the next year. Estimated taxes, these are those quarterly taxes, and so they're usually paid on a quarterly basis. The first quarter is the 3 month calendar period, January through March 31st. The second quarter is April 1st to May 31st. The third quarter is June through August, and the fourth quarter is the last 4 months of the year. In most cases, to avoid penalty, you need to make estimated taxes if you expect to owe $1,000 or more in your taxes for the year, and over and above that amount withheld from your wages. So this is why you have to have your tax preparer or tax person actually help calculate what you need to pay into the system. If you're in a position to pay more, that's a good thing as well, to ensure that at the end of the year you don't owe money. Um, Kind of like when you have money withheld in your paycheck, if you add more in, the more likely you won't owe at the end of the year. What forms do you need? You will be using your 1040 ES, or an estimated taxes for your individual. So that ES form is a worksheet that determines what your estimated taxes is. So that's why you usually talk to a CPA or a tax professional, so that they can make sure they're setting you up with the right amount. Payments are generally due on April 15th, June 15th, and September 15th of the current year, and January 15th of the following year. Um, if all your regular income comes in salary and your employer is withholding enough on your taxes, you should not need to pay any estimated taxes unless you suddenly strike it rich by selling stock at a large profit or winning the lottery. And at that point, if any of that happens, you really need to sit down with a financial expert to help you plan so that you're not spending, it's not paying all your money into taxes, that you have they've set you up with some tax shelters that can help you preserve some of that. If by that chance you sell some stock and or win the lottery, you make sure that that money is going to last you. So that $800 fee is the self-employment tax. So that's the tax. In the event you guys, if you haven't definitely paid into the system, that you can ensure that you have Medicare and Social Security available to you upon retirement. So prior to you being self-employed, it would have just been something that's happening, and those are part of those deductions that are deducted from your payroll check. But in this case, you are that employer, and so you still have to maintain and protect yourself and prepare for the future and your eventual retirement, um, and retirement money, so that you can live past 65 if that's what you choose to do, or you can go on to 75. But that's how you go about that. Regina, did that answer your question? So next, let me ask this question. How many of you become completely overwhelmed during tax season? Show of hands, thumbs up in the chat. For those of you that have been in business, are you able to get your tax documents to the person only when I have to pay? Hey, Greg. ah, okay. So Charles, everybody might want to introduce yourself to Charles Pierce. He is a tax preparer, so this is the best season for him. Good for you, Charles. I don't do taxes because I can't stand that season. It's too busy. All righty. So if anybody looking for a good tax person, not overwhelmed but very business, I do my own taxes with TurboTax. Okay, cool. All right, so let's talk about this self-employment tax. So Regina, this will really help you understand. So what is the self-employment tax? If you're self-employed, you pay the combined employee and employer amount. Um, Whereas when you were employees, you just paid your employee part. Now you have to take on the ownership of both parts. And so what is considered self-employment, and workers who are considered self-employed include sole proprietors, freelancers, and independent contractors who carry on a trade or business. Um, how is it computed? The total self employment tax is 15.3% of your net earnings and consists of two parts. The first part is Social Security at 12.4%. The second portion, it goes to Medicare, and this is a rate for Medicare lands at about 2.9%. When How do you file it? When you're filing your annual tax return, you do a Schedule C of the 1040 to calculate your next net self-employment tax. The Schedule C and the Schedule CEZ will give you your calculated income or loss. Each year, you're allowed to an adjustment to your income and a deduction equal up to 50% of the amount you pay for your self-employment tax. The self-employment tax is computed and reported on the IRS Form 1040, Schedule SE. The law sets a maximum amount of net earnings that is subject to Social Security. Anything over that amount is not subject to tax. The maximum amount may change annually, has increasingly increased over time. So currently, I believe it's still at 137,700. Even though this one was in the 2020 year, I believe it's still the same. Unlike Social Security, the Medicare tax is applies to all of your net earnings, regardless of how much you earn. If you have $150,000 of net earnings, um, as in the previous example, you must pay the 2.9% tax on the entire $150,000. This number will then be used on your Schedule SE self-employment tax to calculate how much self-employment tax you should have paid throughout the year. So again, speaking and having a conversation with your financial team can help you determine what that is and make sure you're calculating it properly. Greg just added that is now 147,000 for 2020. Thank you, Greg. So, some important dates and important tax return deadlines. March 15th. This is the IRS Form 1065 and Schedule K. This is for all partnerships and multi-membered LLCs. So your taxes are due in March 15th. So that's now come January, 3 months from now. So right now is a good time for everybody to start getting their start preparing for getting your taxes done. And we call this your year-end tax preparation, so that you're not scrambling by tax season. You're already ready. The IRS Form 1120S and Schedule K1 for sub S corps. This is when your taxes are due. April 15th is your Schedule C for your personal income tax for your sole proprietors and LLCs. Estimated tax for tax quarterly tax payments. The IRS 1120 and Schedule K1 for your C Corp. So that's March 15th. March 15th, May 15th, and June 15th, again, estimated quarterly taxes are due, and your nonprofit organization taxes are due. So if you have a nonprofit, your 990s is due, and your 199N for the state of California. Very important that you get those done, especially your 199N for the state of California, because they will take away your nonprofit status if you don't, especially after 2 years. There's also a statement of information that needs to be done every 2 years. First one is the 12 months from the time you apply for it and get your nonprofit. But then after that is every 24 months. You want to put that on a calendar because they don't normally or necessarily remind you of that. September 15th and October 15th. Need more time to file your taxes? You can request an extension until the taxes are due. So September 15th for partnerships and S Corps, October 15th for sole proprietors, C Corps, and LLCs. Again, you have to file a form to make that happen. You just can't ignore it and just say, oh, I'll do it in September. You have to file an extension form, and you can go to the irs.gov to find out what that form is, or you can reach out to your financial financial team for either your enrolled tax agent or your CPA. Form 4868 sole proprietor S corps, and Form 7004 for partnerships. So those are some important dates. You always want to keep those on your calendar because the IRS excuses don't go real far for them. So again, Quarterly, this is what's due, your estimated taxes, and if you have employees, then your quarterly payroll taxes are due on April 30th, and they are due again for the third quarter, and then they're due again for the fourth quarter in the next year. So you guys will get a copy of this presentation. There is a link there that can help you. There's actually an online tax calendar that's updated every single year. Okay. Your business tax rate. Now it was for 20. This is for 2020 up to the current 2022. C corps, it's pretty easy. The tax rate is a pretty flat rate at 21% for C corps. State tax and local taxes on business depends on where you live. You may also have to pay state and local taxes. Uh, the types and amounts of taxes you'll pay are depend upon your location. So your state income tax, again, your location. Some states do not have state taxes like Nevada, Oregon, places like that. But in the state of California, we do have property taxes, sales taxes, and this one right here became really, really important after COVID or during COVID, the business registration tax. If you have a business, whether you're an LLC or a contractor, but you're doing business within the city limits of Los Angeles, you must register your business um, for your business tax registration certificate. You can go to the state of California, the Los Angeles City, City of Los Angeles business portal and set up for it. If you've been in business and make less than $100,000 since your first year, uh, you get a little reprieval on paying your city taxes, but after that, you have to pay your city taxes. And you must get this in by February 28th, because if you do not, so put that on the calendar and circle it. If you do not get that form and you don't pay for your city taxes, there is a huge penalty. It's almost $300 if you don't pay, and that means by March 1st, that $300 penalty goes into effect. So put February 28th on your calendar. If it's a leap year, then it moves to the 29th. But make sure, one, you register your business in the city of Los Angeles. If you're doing business in the city of Los Angeles, so have to look at your other cities that you do business in. So Santa Monica, Culver City is part of Los Angeles, but Santa Monica is a separate entity. Um, Long Beach and those cities are Inglewood. They're all different, so you want to check to see what your requirements are for that. If you are in an unincorporated part of the city, uh, like the county, the only entities that have to register for a business license and tax registration are those in the food industry. But again, you still need to verify depending on your industry. So those are all very important. Mark those on your calendar. All part of being compliant and ready to do business, being business ready. Can you register when the contractor is landed in the city? Well, if you're actually a resident of the city and doing business in the city, when you go through the process of setting up your business, you really should be setting up your business license. Okay? And if you're doing business in other cities, um, and predominantly your income is coming or your revenue is coming from that city, you need to do that as well. And if I recall, I think even LA City takes a little bit of percentage of others. I think I've done a couple of my own clients that way. I have for the city of Los Angeles. Okay. Yeah, I think I actually have a client that I've processed her business taxes, and LA takes a little bit of everybody's taxes. They're a little greedy like that. Okay, the top tax mistakes small businesses make. We're going to discuss that. So, failing to file or sending the proper forms or payments. So, depending on your legal structure of your business, the type of industry you're in, and whether or not you have employees, you're required to file and send any number of different forms to the IRS and possibly your state tax department as well. You have to file your quarterlies, as we said, as I discussed, your payroll taxes, your estimated income taxes, your sales taxes. Others are submitted annually, and still others, such as your W-2 and 1099s, must be sent directly to your employees or your other workers paid throughout the year so they can file their taxes. Those are due by January 31st. Your 1099s and your W-2s must be out to your employees and your contractors. You have to make sure you file it um, um, with the IRS by February 3rd. So that means you really should be working on your year-end tax work right now so that you will be ready, because before you know it, January 31st will be here. Just be on the safe side to have your accountant set up an annual calendar or use that link that you will have in this presentation so that you know what's due, when it's due. The IRS publishes that tax calendar each year and lists the dates, because again, um, the IRS don't really like excuses. Charles says the 4868 is due along with payment for any calculated tax liability April 15th to a 6-month extension approved from California. 3519 is used for state payments applicable for a 6-month extension as well. Get Charles's number, guys. He has information and he can help you. If you haven't set up your team, he could be a great member of your team. Number 2, overestimating or underestimating or overreporting or underreporting. What does that mean? When the estimate is higher than the actual value, is called overestimate. When the estimate is lower then the actual value is called underestimate. If your factors are only rounding up, then the estimate is overestimated. If factors are rounding down, then it's underestimated. So what happens if you underreport? Companies and individuals chiefly underreport in the effort to avoid or reduce their respective tax liabilities. If the IRS does discover the error and you owe money, more taxes than you paid, you will pay the taxes plus the interest and failure to pay penalty. You may have to pay a penalty of $5,000 if you file a frivolous tax return or other frivolous submissions. If you jointly file a frivolous tax return with your spouse, both you and your spouse may each have to pay a penalty of $5,000. So you don't want to underreport. Could cost you a lot of money. Now, over-reporting. I had a client that guesstimated his taxes. He was in the property management business. So he didn't have an accounting system. So whenever he would go to pay his taxes, he would use the number that he would use to acquire a loan or a line of credit. And so what he did was he had number he had a number of apartment buildings with a number of units in each one of these buildings. So he just kind of took a total based upon the rent that he was charging for each one of those apartments. And that's what he gave to his tax preparer to do his taxes, because he had no financials, he had no accounting system, he had a guesstimation system. So I got called in because he over quoted or over reported what his income was. And now all of a sudden, the IRS had this humongous bill. He owed like some almost close to $50,000. He panicked. So actually, I got him as a referral from our bank, because we banked at the same bank, and asked could I help. So when I went in to do my forensics, I discovered that number of his buildings had vacancies, and had vacancies for predominantly most of the year. And then he had some Section 8 housing vouchers, and they were in rescindment, so which means he wasn't getting paid by the state or the county either. So he never received this income that he overestimated or guesstimated. And so that was the problem. So I had to go in and do a rent roster, and to record the rent for every building. I believe there were 6 of them, and I think minimum number of units were 10. So I had to go in and calculate the rent for each one, and the ones that were occupied and he was receiving payment for. The other ones he actually was receiving a loss, and but he didn't report it that way. So once we did that, they were able to reduce his taxes, and he actually ended up coming out because he took losses, so he actually ended up getting a refund. But moral to that story is never guess. Be sure about what your actual income is, because the IRS is taking you at your word, and they're going to tax you based upon that income. Thank you, Greg. See you tomorrow. Appreciate you. Um, so next, number 3. So hope you guys take heed to that. Don't just guesstimate, because it'll cost you. Next is mixing, and this is huge, guys. Huge, 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 huge. Mixing personal and business expenses. If you muddle the financial waters by intermingling your personal and your business expenses, you could be creating the biggest mess that will have to be cleaned up when tax season comes around. Separating your business and personal taxes by maintaining and using separate bank accounts, separate credit card accounts, keeping separate receipts, and paying yourself a salary instead of a draw directly from your bank account. This is another area where a bookkeeper can advise you on how best to keep your expenses um, separate. So this is really, really important, because when it's time to acquire a capital for your business, and you turn in your financial reports, and they see receipts and bills that you're going to Ralph's and uh, Ross and the movies and all that sort of stuff, now they're going to start asking some personal questions. So it is always the first rule of thumb is to keep your business separate. And I know pretty much every business that I've ever done books for, that is a pet peeve. I have to muddle through all the personal stuff. On top of the fact, now I know exactly how you live, because your bookkeeper can see exactly how you're spending your money. But we have to extract that. Now, I have another story. I have a client that is a client of mine, has been a client of mine for a long time. He has a public company, and the company is about to be listed on the New York Stock Exchange. And there's an audit. There's always an audit for public traded companies. So much explanation had to go in, because everything was all intertwined. His business and his personal travel with business travel, and we had to go through all kinds of documentation in order to get it all separated. So, if for those of you who are just starting your business right now, just develop a habit. If you have 2 bank accounts right now, dedicate one to your business. Put your business money in there. If you need to transfer or deposit money because you don't have enough to pay your expenses and you're taking it from your personal savings. Make sure it's clearly explained in the details, so if anybody's asking questions, they can see it. So just something that I've learned over the last 30 years and of providing accounting and bookkeeping for small businesses. Writing personal checks. So these are some of the major issues. Writing personal checks to from personal writing checks from personal accounts to pay business expenses. No, no. Um, really messes up what's deductible when it's tax season because now you gotta pull it all apart. Taking money from a business account for personal use. Make sure if it's a draw, make sure it's really clear. Total up what your expenses are, how much you need out of your company. Write yourself a check, uh, and then it's recorded as a draw and can be found on your balance sheet. We'll talk about that in a few minutes. Transferring money to each different accounts without documentation. Never, ever, ever write notes on everything. Be really explicit about why you're moving and transferring money. Money to pay for payroll for this period. Money to pay for taxes for this tax year. Money to buy new equipment, in loaning company money to purchase new computers, whatever that is, make sure you're really, really clear in your documentation. Sharing account for business and personal transaction, we just talked about that. And depositing checks signed for a business account in your personal account or vice versa. So I know everybody's probably been guilty of this, but if come January 23, let's make a conscious effort to separate the waters, separate the financial waters from your business to your personal. Charles says having a dedicated business credit card along with a business checking and your savings are best practices. Exactly. And you want to run your business because at some point you're going to not be the one doing your books. You're going to have someone doing them for you. And you want to make sure that when that happens, everything is really clear and succinct and that you're well organized. Next is poor record keeping, putting your tax deductions at a risk. Well organized records make it much easier for you to prepare your taxes. Documentation, both the amount that you're spending in good order, can also help you provide answers in the event the IRS has questions about your returns or you're actually audited. Um, quick answering is everything, but try not to be too obsessive or compulsive. So here's my thing as a bookkeeper, and I do full charge when I am doing it for clients. I record just the very pertinent details, dates, very succinct, clear messaging, and I attach and document and date the backup documentation. So, and you keep those records. And you can keep them on your computer. You can scan them and keep them in a folder on your computer, or save them on a external drive. So if you did get questions, you can pull them and show them right away. If you don't want to keep a lot of um, uh, um, boxes with all your information. So in today's world, you can scan them and store them on pen drives or external drives on or your Google Drive or your OneDrive on your computer. Just make sure you back everything up so that you have them. Why? And that's why you should keep records, because at some point the IRS may audit you, and the person with the best records, with the most information, and you can ask Charles this, you'll be asked less questions. I have done numerous of audits for nonprofits. The first time was a lifelong lesson for me, because after that, I make sure everything that I do Doesn't require you coming asking me anything. All you have to do is read the notes. What type of records should you keep? Tax returns, um, loan documentations, contracts, um, anything that anyone can come back to you and want to review. And generally, a 3 to 7 year time frame is important. Charles, how many years do they need to keep their tax returns? Um, Put that in the chat for us. That's a rule of thumb in my for me is 3 to 5 or 3 to 7 years is a good time because anything somebody could sue you, and so you'd have your records at that point. So next, number 5, not taking the proper deductions as a startup business. Let's see, what's this? As a startup, I use my personal account to pay for laptop to be used for business. Where do I document this? Well, William, in your accounting system, and we'll talk about that shortly, you can indicate that under if the computer was over $600, because that's when it becomes an asset. If you pay over $601 for a computer, a laptop, then you want to list that on or have that listed on your balance sheet, and so you can indicate there and that the monies were you provided or purchased the laptop for the computer for the business. Charles indicates, as I said, minimum 3 to 7, but with assets and the depreciable life assets claimed. So 3 to 7 years is the time frame you should maintain your documents. Not taking proper deductions. So for those of you who are just starting businesses, startup costs are actually deducted. Taxes, interest, fees, and charitable contributions are proper deductions. Retirement plan contributions, bad debt or losses, home office insurance, utilities, property taxes, home repairs, health insurance, and education or professional training are some of the deductions that you can take. But if you're not maintaining an accounting system, how will you know that you've done that? So that's where we're going next. Having a accounting system is the best way to keep track of of all the transactions, the financial transactions that's going on in your business. There are a number of products out there. QuickBooks is one that I recommend. I teach and have been teaching on QuickBooks for the last 30 something years. I am a pro advisor for QuickBooks, not too much about it that I do not know how to use. And another product that I've been using, and it's also itemized, listed there, is Wave. So you're just starting your business. I highly recommend using Wave because there's no cost associated with it. QuickBooks does have a cost, and so you want to make sure that you can afford the system that you're going to be using. Very, very important that you do. So Wave is a free product, works very similar to QuickBooks. Is actually not too much different, but it's really good for startups and brand new businesses because it's very easy to use. No accounting jargon. All you have to do, it speaks in terminology that you understand, the non-financial person. So if I teach both of those classes, I think I spoke with John, maybe we'll be putting one of those classes or a series of those classes on the calendar for next year, and we can get you started. Or even as an individual consultant, I can help you get started with
Absolutely,
that.
absolutely.
Absolutely, absolutely. Okay, there you have, there you have it. Um, so, counting basics for small businesses: open a bank account, keep track of your income and your expenses, develop and create a bookkeeping system and stick with it. Build your business credit. Determine how much you're going to get paid. Um, preferably in a salary. Establish your sales tax procedures. Determine your tax obligations and set up your payroll systems when it's time to start paying your employees. And be very, very careful, guys. In 2020, along with everything else with the COVID that was going along, there was legislation that some of us had voted for, and it was called the AB5, where it changed the classifications of those individuals that are contractors versus employees. So don't find yourself in a bind where just to save yourself some money, you hire someone that really is truly an employee and not a independent contractor, and the employment development department comes back at you because it's a stiff penalty. So you want to be very knowledgeable of that. So write that down, AB5, and go research it to make sure you don't fall in that capacity. Nonprofits tend to do a lot of 1099ing for because they can't afford employees, but it will cost you. Um, open in a bank account. So you're legally after you've legally registered your business, you'll need to stash your money. So you want to open a separate bank account that keeps your records very distinct and will make your life easy when it comes to tax season. Also protects your personal assets in the unfortunate case of bankruptcy, lawsuits, or audits. And if you're funding down the line, if you're going to be requiring capital down the line, creditors and investors require strong business financial reports, and this can increase your livelihood of being approved. Note LLCs, partnerships, and corporations are legally required to have a separate bank account for their business. So the proprietors don't legally need to have a separate bank account, but it is highly recommended. But if you are an LLC or a partnership or a corporation, legally you have to have a separate bank account. No co-mingling. Next, you will want to consider, as Charles indicated, a business credit card to start building your credit. Credit is important for securing funding in your future. Corporations and LLCs are required to use a separate credit card to avoid commingling and business assets. Let me tell you a little bit about the credit piece. Um, First thing, uh, as a small business owner, you wanted to establish a relationship with a bank that is going to also be part of your financial team. And you don't want a bank where you're just one of the multiple depositors in that bank account. You want to, especially right now, while there is an opportunity to do this. Eventually, banking may be all online, and it's going to be much more difficult to establish a relationship with your bank. You need to establish a relationship with your bank that they know more about you than the fact that you have an account there. You need to sit down with them. You need to discuss what your future plans are for your business. If you know in the next 3 to 5 years you're going to be looking for, or 2 to 5 years, you're going to two, because you got it. They're not going to really give you any loans or any money for your business within the first 2 years of your business because you have no traction. But if you go in and meet with them, sit down and let them know what your plans are and that you want to this bank to be your business bank, then you want to go in and meet the branch manager, the bank manager, and they know you by first name basis, because when it is time to acquire capital, a relationship goes a long way. And I'm going to tell you this, any banker will tell you this. I have several friends that are bankers, and they have said that if their banker or their branch manager, who they have a relationship with, leaves the bank, they will literally leave and go wherever that bank manager is going. That's how important it is for you to have a relationship with your bank. I can't tell you what bank that is. You have to choose the one that is best suited for the business and the industry you're in. Um, I personally prefer smaller community banks. My bank knows me at all the branches. I was out of the country a couple months ago, and there was whatever it was, my bank didn't approve the transaction. I called. It's on a Saturday, and I'm in another country. I called, got to speak to the branch manager, told her what I was doing. I had already gone into the bank to let them know I was going to be out of the country, and I guess the information didn't get translated across the board. She um, she approved the transaction right then and there. No problem, no problem. Crystal got it taken care of. It. Give it 5 minutes. That's what happened. Many people during the pandemic received their PPP and did not fill out any paperwork. The bank did it for them. They just sent the documents to be signed. Why? Because they had a good relationship with the bank. So find a bank that is good for your business, is good for businesses, period, and get to know them. This window of opportunity won't last forever because a lot of banks are going online, and it's going to be a little difficult to do that. So that's my recommendation. So Sarah says, haven't found any famous bank to treat me well with good customer service. Looking for one. Um, Credit unions do. Some of them do offer business banking. Some of them do not. So you have to do your research. There's a couple of banks. I would pick, do your research, see which one works for you, and then go sit down and see what that looks like. I personally bank at City First Bank, which used to be Broadway Federal, but they merged with one of the largest black banks in DC, and so now I get excellent service there. But that's me, and that's my organization since we're all about recycling the black dollar. But for you, you have to do what's right for your business and your industry. But it first starts with going in and introducing yourself to the branch manager. Okay? And also, if you got a good relationship with your bank, they always got great seats at any function in the city, especially if they provided funding for them or any sort of sponsorship. And they're always looking for someone to fill those seats. So you might even get to go to some really great events, provided that that manager and you have a relationship. Relationships matter. 9 steps to establishing your credit. Put your business on the map. Maintain good credit with your suppliers and your vendors. Obtain your EIN number, separating your Social Security number from your business. Again, it's called part of that commingling stuff. Pay your bills on time. Establish your Dun and Bradstreet. I think they're called something else now, but you're done. Open up a business credit card and get incorporated. Separate business personal and monitor your credit, monitor your expenses with an accounting system so that you are never guessing what your financial structure is when it comes time to applying for loans and lines of credit, all your information is there. Sarah says, me too, black owned financial institutions. Yes, so that works for me. That's me personally. Everyone has to do what's best for them. Okay. Um, Here are some period uh, um, um, limitations. So if you owe additional taxes and situations, you should keep your taxes 3 years. Do not report income that should have been reported 6 years. File a fraudulent return. That's unlimited. Those are the limits of statutation. Do not file a return unlimited. File a claim or for credit or refund after you filed your return. 3 years or 2 years after taxes are paid. Charles, if you will verify that that's still current, I appreciate it. File a claim for a loss from worthless securities or bad debt, 7 years. So just some period of limitations. You can also reach out to your own financial team and verify that based upon your business. Okay. Now this one's important. Accounting. So here's the thing. A lot of us don't manage our books because we think it's going to cost too much money and we can't afford it. We're all brand new businesses and monies are limited, right? But I'm going to tell you, you can't afford not to. So QuickBooks average cost is somewhere between $25 and $80 a month. I do recommend, um, thank you, Charles. I do recommend, if you're a brand new business, maybe you might not want to incur that cost, and I'd rather you not incur that cost or start it and then drop it. So the next alternative is the Wave accounting software. It's absolutely free. As I said before, the only thing that they do charge for, if you accept payments through the system for an open invoice. If you're doing that, then at that point you're going to pay whatever the going rate is that you would be using if you use PayPal or Stripe or any of the other pay portals that you use. But other than that, and payroll, they do charge you for payroll, and it's comparable to any other payroll system out there, Paychex, Gusto, or QuickBooks. So you can't go wrong with free, and it's a good program. For something that's free, it's incredible actually. Um, and the next one is having a CRM system that can help you keep track of all of these important dates that we talked about in the very beginning, with your tax returns and things like that. So you want to make sure that you stay on top of everything versus having everything fall down on top of you and then you having to dig yourself out from underneath the mountains of paperwork in order to correct stuff. And also, that includes the penalty and interest that go along with that. I'm going to skip by this one, but I am going to talk about whether or not, um, um, this one right here, whether or not you should do your own taxes. Um, it takes time and patience. If this is not your expertise, remember this is vitally important that one, you're getting the deductions you deserve. Two, that you're not making unnecessary mistakes because it's outside of your realm of expertise. It is so much easier just to hire the person that's going to do it right in the first place. And then you can move forward with peace and ease that you're not going to have to explain something 2, 3 years down the line when you may not be in a position to do that. And also, you also want a person that's doing your taxes to be in a position that if you are audited, that they are there for you to help you go through that audit and to prepare you for that, and in some cases even stand up for you. So again, you get what you pay for. If you don't want to do it, for me doing my own taxes has never been an option for me. I just choose to go somewhere where that person can do it properly, and then I don't have to worry about it. Once it's filed, I can go on about my business and not be worried that I made a mistake. Um, so again, it's up to you. You might be that person that feels comfortable doing their taxes. Are you okay if I try to request a connection with one of your panelists? Sure. You have to ask John and Ty or Samara. They can tell you that. um, Oh, networking. Yeah, no, everyone should be networking. It's very important when you guys are on these platforms to network with each other. Uh, Especially if it appears that many of you are just starting up your businesses. So if you have questions and concerns and fears, this is your little team right here because you guys understand where each other are at this point, especially if you're brand new to the business world. So, yes, by all means, if that's what your question was, by all means, please do introduce yourselves, guys. Resources. Everyone needs resources, right? The couple of things that I found when I first started my business was the more I read, the more people I connected with, the less complicated running my business was. And so there are some amazing portals out there. The Los Angeles Urban League is a great resource for you. You also to a number of us that are consultants. I'm one of the consultants. So if you want to set up and schedule an appointment with me, you can reach out and Ty will give you my link, calendar link, and you can get on my calendar and we can sit and talk about your issues and your challenges or questions that you may have. There's also a number of other very qualified consultants at the Urban League. The City of Los Angeles Business Portal. This is where you'll find out about the business tax registration. You'll find out about anything that the city offers to help you as a small business owner come through this journey successfully. The state of California, the business portal there, have a wealth of information for you. The Internal Revenue, the Small Business Administration, the SBA, have a wealth of information out there for you. There is no reason for you as a small business owner to muddle through and make unnecessary mistakes when you don't have to. There are resources and people and advisors and mentors that are out there for you to make this journey that much easier for you. You just have to reach out. So do your research. So those are some portals. When you get this presentation, the links are live. It'll take you directly to them. Now, for those of you, because tax season is right around the corner, if you made any money this year and you need your taxes prepared for free, the this organization will do your fax. It's free tax prep in Los Angeles. If you made less than 55,000 a year and you may qualify for free tax filing, this is through the Vita program. Where you file your taxes, and I think it's just really for. And Charles, you can confirm if you have information on it. I think it's primarily for sole proprietors. I don't know if they do corporate taxes or not. Probably not, because it is for a minimum of 55,000 or less. So that is a live link. And right now, those tax preparers are all gearing up to get ready to help you through the tax season. Remember, 1099s are due by January 31st. If you have employees that do, but you need to get your 1099s done, submitted no later. I think the date of submission is February 3rd, I think. So start preparing now. Next month, start gathering all your data, all your documents. If you don't have an accounting system, probably a really good idea to get my link from John so I can help you guys get ready for that. At least get you set up on Wave and you can have it syncs with your bank and it brings in transactions up to 18 months and we just need it so in really actuality from January to now and we can get your information in and when you go get your taxes done this year you'll be able to just give your tax preparer a profit and a loss statement and as well as the transaction reports, and they can process your taxes from there. And it's just that simple. In addition to that, you can have a clear idea of how much money you've made. And the other thing I'm highly recommending to everyone is right now is when we start planning and forecasting for 2023. Don't let 2023 come in and you're guessing at how much money you want to make. You need to know how much you're going to make, and you need to have a very detailed plan for every month on how you're going to um, make that money. So you want to be able to break it down month by month, quarter by quarter, and then you want to stay on track. You also want to establish your budget, your spending budget, to make sure you're operating your budget, your business lean. If you have aspirations and goals to hire or to increase your production, of your product or service, you have to plan all that. And that all is done by knowing and understanding exactly how your money is coming into your business and how your money is going out of your business. So, pretty much everyone, that is bookkeeping and accounting and insurance and risk management compliance, and what you as a business owner are required to do to run a business. The goal is to make sure your financial structure is solid, and then that way you don't have to concentrate on that. You can concentrate on growing your business and eventually scaling your business and taking it to the next level. That's why we're in business. This is my contact information, and you can take a snapshot. But if you want to meet with me, just reach out to Ty, and he will make sure you get my link. You guys will get this presentation. Please follow me on Facebook, Instagram, Twitter, and YouTube. My podcast, I have two great podcasts. One is tomorrow at 11 a.m. It's called the Community Briefing. We have some bankers on, I believe, tomorrow, so you can ask questions. It's a platform that introduces us to our leaders and stakeholders that are making decisions on our behalf in our community. And then my show on Friday is called The Business Zone with Crystal and Gilbert. Both of us are business coaches for well over 30, between the both of us, 30 years. So we have a um, vast knowledge, information that we share with our small business community. So with that, John, I want to thank you so much for in the Urban League for giving me this opportunity once again to teach a class and to share. And I look forward to meeting you guys if you need a consultant. And with that, I'm going to turn it back over to you, John.
Great. Well, thank you, Crystal. As always, a wonderful class. As I say every time, people probably tired of hearing me say it, but
of course not.
I've been in business for some 30 years, and been an entrepreneur for over 20 of those 30 years, and I feel like I've been to every seminar, heard every single thing anybody could possibly say over those years. But every single time I listen in on Crystal's class, I always learn something. Always come in with a different perspective. And so she really is a powerful resource, and we're just very lucky to have her be affiliated with what we're doing here at the Urban League. Again, I would just encourage everyone, if you haven't already done it, sign up to be a client for the Urban League. There's lots we're looking to bring to the table, including the wonderful expertise that Crystal has delivered to us today. So thank you very much. Have a wonderful evening. And Crystal, thanks again so very much. We really appreciate it.
Thank you. See you guys. Bye-bye.
Good night, everyone.